Understanding KSOPs, a comprehensive guide. What is a KSOP? A KSOP, or a Qualified Stock Ownership Plan, is a unique retirement plan that harmoniously combines the features of an Employee Stock Ownership Plan, ESOP, with a 401k. This dual-structured plan is designed to provide employees with a greater sense of ownership in their employer's business while simultaneously allowing them to save for retirement. The defining feature of a KSOP is that when an employer contributes to the employee's retirement savings, they do so in the form of company stock rather than cash. Key takeaways. A KSOP merges an ESOP with a 401k in a cohesive retirement strategy. Employers provide matches through stock contributions, not cash. KSOPs are classified as defined benefit plans, which can lower administrative costs associated with managing separate plans. They entail lower initial costs for companies when compared to traditional retirement plans. While offering benefits, KSOPs can expose employees to greater risks deriving from stock market volatility. How a KSOP works. The KSOP enables individuals to utilize their employer's matching contributions while fostering a sense of ownership in the company they work for. Here's a closer look at how the plan operates. 1. Employee contributions. Employees choose to contribute a portion of their salaries toward their retirement accounts through regular payroll deductions. 2. Employer contributions. Instead of allocating funds in cash, employers contribute shares of the company stock as matching contributions, creating a unique alignment between employee performance and company success. 3. Market dependence. The retirement benefits an employee accumulates in a KSOP depend heavily on the performance of the company's stock and the overall contributions made by the employee and employer. Benefits of KSOPs. Liquidity creation. A KSOP aids companies in generating a market for their stock, providing employees with the allure of potential profits associated with good company performance. Incentive alignment. By having a share in the company's equity, employees are more inclined to work towards enhancing overall profitability, potentially driving stock prices higher. Low overhead. Companies experience reduced administrative costs, simplifying the management of retirement plans and allowing for focused resources on core business functions. Special considerations. While KSOPs offer multiple benefits, they also present unique risks. Unlike traditional 401k plans that allow employees to diversify their investments across various asset classes, stocks, bonds, mutual funds, etc., KSOPs can lead to concentrated savings in company stock. This exposes employees to significant risk should the company perform poorly, potentially diminishing their retirement funds. Comparison: KSOPs versus other employer-sponsored plans. Beyond KSOPs, companies can opt for several other retirement plans, each catering to different organizational sizes and employee needs. Key alternatives include SEP IRA, Simplified Employee Pension Individual Retirement Arrangement. Target demographic: self-employed individuals, freelancers, and in some cases, small businesses. Contribution limits: the lesser of 25% of compensation or $66,000 for 2023, increasing to $69,000 in 2024. Benefits: employers can claim tax deductions without mandatory yearly contributions, however, any contributions made must be equal across eligible employees. Simple IRA, Savings Incentive Match Plan for employees. Target demographic: small businesses with 100 or fewer employees. Mandatory contributions: employers must make either a flat 2% contribution or match up to 3% of employee contributions. Contribution limits: employees can contribute up to $15,500 in 2023 and $16,000 in 2024, with additional catch-up contributions for older employees. 401k. Contribution limits: employees may contribute up to $22,500 in 2023, rising to $23,000 in 2024, with an additional catch-up of $7,500 for those aged 50 and older. Employer contributions: employers may match contributions, enhancing the savings potential for employees. The bottom line. KSOPs represent an innovative intersection of employee ownership and retirement planning, allowing employees to invest in their future through company stock. While they offer a compelling approach to enhance employee engagement, they come with additional risks that must be carefully considered. It's crucial for employees to understand their retirement options and the specific implications of contributions made toward a KSOP. Ultimately, employers and employees alike should consider their financial goals, risk tolerance, and the potential for diversification when engaging with retirement plans such as KSOPs, 401(k)s, and other employer-sponsored options.